Well, the US Federal Reserve has announced that they will cut back on their stimulus more quickly at a moment of rapid inflation and strong economic growth as well. This could trigger as many as 3 interest rate rises in 2022. Monthly bond buying, which has kept the US markets afloat during the pandemic, may come to an end sooner than expected. Already, bond buying has been 50% lower than was announced last month, which would bring the program to an end in March. The Fed chair says this decision comes in light of inflation developments and the further improvement in the labour market as well.
At today's meeting, the committee also decided to double the pace of reductions in its asset purchases. Beginning in mid-January, we will reduce the monthly pace of our net asset purchases by $20 billion for Treasury securities and $10 billion for agency mortgage-backed securities. If the economy evolves broadly as expected, similar reductions in the pace of net asset purchases will likely be appropriate each month, implying that increases in our securities holdings would cease by mid-March, a few months sooner than we anticipated in early November.
And to break this down, I'm joined by Michelle Schneider from Market Gauge. Michelle, lovely to see you here. Now, Jerome Powell is speaking pretty constructively on the economy and the policy there. But what exactly do we know? What comes from this?
Well, a lot of what he was saying today was already priced into the market, which is why we've seen the market decline into the meeting and then rally after the meeting. Notes were published. Because there's a couple of ways that you can interpret this. Number one is, besides the expectation, he did have somewhat of an optimistic viewpoint in that we will do this because we're expecting economic growth. So that's a good thing. Secondly, he did not raise interest rates right now. So we're still looking ahead, and he's tapering until March. And of course, we know that anything can happen. The good news would be that nothing horrible happens, and he can go ahead and possibly raise the rates, which is probably long overdue. The worst thing, although some traders would not necessarily think of this as the worst thing, is that something does happen to upset the economy further, whether it be virus or what have you. And he can then say, you know what, we're tapering faster, but we're not quite so ready yet to raise the actual rates. So he's put himself, even with all the criticism, in a pretty good spot to be relatively flexible. And clearly, after everybody was expecting this to be the dagger to the market, the final blow, instead it turned around and had a huge rally into the close.
Yeah, I think everyone was sort of thinking and expecting and bracing for the worst here, weren't they? But the markets have sort of reacted in a really positive way here. What about in the crypto space?
Well, the cryptocurrencies, I think, would have also really fallen hard if anything that came out of Powell's mouth would have spooked the market further. But instead, just like the actual market, it turned around and rallied. Now, it was a little oversold, so there's that. And of course, you have a lot of people that are willing to buy at the levels at around the mid-40s, which is where Bitcoin was. So now the test is going to be not just for the market, but even for the cryptocurrencies. What happens after everybody digests this and what they hear? Can Bitcoin get over 50? Can Ethereum hold 40? And then some of the other coins that are also moving up in tandem. Can Solana, for example, hold 174? And can the overall market sustain? Because what we've seen is semiconductors leading, of course, but we've seen the Russell 2000, which is the small caps, and we've seen the retail sector, which, by the way, retail sales were very disappointing today, lag. And that's where this choppiness is coming from. Are we looking at a stagnating economy and tech is continuing to lead because that implies that the easing will continue to some degree and that they won't be quite as hawkish? Or will that flip around now in these critical levels that have to hold here in these small caps and retail, hold, rally, and that will just send tech flying even further, or maybe even some kind of rotation more into these insight sectors, which ultimately would be the best sign overall for both the economy and the market.
Yes, and now, I mean, even in the face of COVID, though, transportation and regional banks in particular remain really bullish at the moment. What's behind that?
Well, that to me, actually, I like to look at, there's 6 different, one index, which would be the small caps, and then 5 sectors that I really like to focus on. And transportation is one of the key. And because it really represents the demand side, and of course, a big part of the demand side is airlines and cruise ships and people traveling and people going back to a normal life. And even with the Omicron and all the fear and all of the just confusion about vaccines, et cetera, we're still seeing transportation holding up, which means that there is, market smart and very predictive, there is optimism that we will get through this and people will return to a normal life globally, not just here in the United States, as we get into 2022. And if that happens, what's interesting about that, Holly, is if we start to see things get better and people traveling and spending money again, that actually is inflationary from a different ilk than what we saw inflationary from low labor force and a bad supply chain. So I wouldn't say we're all out of the picture and out of the woods here and the picture is just going to be great and everybody can just buy. But I will say that transportation will be very interesting to watch as we get over the next couple of months.
Interesting stuff. Now, I cannot believe I'm saying this, but Christmas is just weeks away, or next week, in fact. It's pretty scary, and then we're into the new year as well. What will you be keeping your eye on in particular?
Well, everything we just talked about, obviously, I will be very interested to see whether the transportation sector can hold up, if the small caps can catch up, or whether or not they actually drag down the tech. Whether or not the talk from Powell today, when the market sort of reconsiders it, thinks, oh my God, easy money's going away, and that's going to be a concern. Whether Omicron continues to rear its head. These are the things I'm going to be watching. I'm going to take it relatively easy over the next couple of weeks, and then I'm starting to put together my list of areas that I want to watch for 2022.
Exciting.
And this whole idea back to normal would be really a great opportunity because they've just been beaten to a pulp.
And we're going to be keeping a close eye on everything that you're following at the moment as well. Michelle, great to see you as always. We'll catch up with you next week before Christmas anyway. Take care.
You too.